Investors and traders, welcome to the channel Market Chart Pattern. Today is 26th of February 2025. Hope everyone is having a great day. We'll be taking a look at the key US markets that we follow on the channel for this video segment. As always, the videos are for educational purposes only and it is not a financial advice. So let's start by taking a look at the US dollar. So the US dollar has actually been weakening and it's just been moving lower to our daily target, which we had set right here. And on the weekly chart, we had a key level, but the market actually went below that, and now it is kind of back up again. So I'll show you what that level is. But I think this is the region where we are likely to find the US dollar to find some really good support because this green ABCD is just really the market came around 106 level. It's around 105.86. So I think we are getting into the region where we could see the dollar stabilize more. And then on the weekly, this is what we have been watching for, 106.12. This is the really nice ABCD right into the 38.2% retracement of these lows right here to the top right here. So we're just watching for the US dollar. Although the week is not over, we are just through the midweek, but we can see the it is range bound, but we do not have much economic data thus far. But Thursday and Friday, we do have some economic data coming out. So let's see how the week will close. But this is the level around 106 that we have been watching very, very, very carefully. Now, let's start to take a look at the yields because something really, really interesting is happening in the bond market. And I will start by taking a look at the shorter end of the curve. So let's start by taking a look at the 2-year Treasury notes. And wow, they are right at our 38.2% retracement, 4.07. It is also the bottom of this trading range. So we saw the top of the range, then the bottom of the range. In my opinion, if we begin to close below this and the momentum has already shifted to the negative side, so basically lower yields, because we have the price below the 20-day moving average, which is likely to cross below the 89 period moving average. So I think over time this trend to the downside could actually strengthen. There is a pretty good possibility for that to happen. And then the other interesting thing is this is the dynamite triangle that I had drawn here. We also broke the lower end of it, and one of the things about these dynamite triangles is when the price actually breaks out of either of the range, and then it's a pretty dramatic move, and this is what we have seen. So now let's see over the course of next 2 trading days how the price will react, because this 38.2% retracement is where we could find the market find some sort of support also from structure. If that were not to happen, then what will happen is basically that we could see an accelerated move to the downside, which means the yields are actually moving lower. Now, the most interesting one for us to is taking a look at the 10-year Treasury note yield. So this is TNX chart, and boom, what we have seen is the yields actually pull back rather quite dramatically, and they broke below the 61.8% retracement of this low to this high. And also we have an ABCD 1-to-1 price projection completing, and I believe it's right at the 78.6% retracement as well. So we could have an area, all the market closed below the 78.6% retracement, but if there is no follow through the downside tomorrow, we could see some resurgence into the yield that could come. There is a possibility for that, although it does look like we could have put in a double top formation right here. This could be this might be easier to see on the price axis. So we'll take a look at the 10-year treasury note on the futures chart, but just do remember this ABCD being completing right here. And then if we just move over to the futures, and there we go, we had drawn this as our target, that when the market was right here, we had drawn this as our ABCD target. So the market has actually reached the target, but it has also broken this bearish symmetry. So this is the bearish symmetry. This was the biggest move that we had seen in this entire decline, and the market has broken above that, but it also has done in an ABCD fashion, and this is exactly the same move as this bearish symmetry. So it'll be interesting to see that although we are actually breaking out of it in terms of one moves which are just one directional, but when it does it in an ABCD fashion, what sort of reaction are we likely to see? So if the market in short terms is strong and begins to close above these levels, I would like to see two more closes above that. Then this is a strong suggestion that we might have seen a pretty important low right here, and the 10-year treasury note price could actually keep on accelerating higher. So we'll begin to turn bullish, or we'll begin to see this as a pretty or the rally in this entire bear market might actually we could get a pretty good rally, and then we'll see further structural performance, how the structure is forming, and see how this market is actually showing us the key patterns, whether this bull move is likely to continue higher, or we begin to see the pressure on the yields come back again. What is also really interesting is this red line. I'm gonna actually make it from dotted to the solid line right here. It's a really important one, because if the market begins to close above this, then this is a throw over. So once the market was able to break below this, now it's getting above this. This is a technical formation, which is known as a throw over, and usually it is a pretty strong signal, but it also remains to be sustained. So we are really at really critical levels on the 10-year treasury note in futures, and of course on the yields is just the flip side of it, because bonds prices and yields are inversely related. So really interesting juncture for the 10-year. And on the longer end of the curve, so long bond futures, wow, so they have been actually much stronger, and they have actually not only reached this target but actually broken above it and right at the 78.6% retracement. So they are much stronger on the longer end. This is really interesting, because the longer the duration is, the higher yields you would expect from a risk-adjusted perspective, because of course there is a longer duration brings longer uncertainty with respect to reinvestment of the coupons, many other things that investors would like to see. So we have this possibility now that we are actually in an ABCD like this. Let me actually change the color of this like this. Let's just clone it and take it like this. So I think we are really looking at the let me actually redraw this. Okay, we already have this. So I think we should get to pretty much the 50% of this entire decline. That should come quite easily by the looks of it. So it's pretty strong. Pretty strong price action in the 30-year. So really interesting to see on the long end of the curve. And then if we were to just take a look at this on a TLT, it's also bullish. So really interesting things happening. If the yields are likely to back off, then I think this should also be supportive of the stock market, especially growth stocks, and also the small caps, which are the Russell 2000, Russell 3000 kind of stocks. Let's take a look at the gold, because something really interesting is happening in this market. So you can see that the gold, for a number of days, pretty much the entire week, has been stuck in a trading range. It remains supported from the 20-day moving average, but this a really key resistance level that we have around 29.60-65, that is just holding it back, and that's just not any ordinary number. That is the 1.618 expansion of this entire trading range, and then we also have this ABCD extended CD leg. So we have confluence of two things coming together, and whenever we have a confluence of two ratios or patterns coming together, is something we pay very close attention to. So let's keep on watching this, because there is a possibility that if the market actually is unable to break above this level, then we might not see higher targets. We might actually see a market which goes in a trading range, and maybe that trading range then begins to form the CIT, which is change in trend, and we could see a pretty nice pullback into the gold market, which has been super hot actually since February of 2024 in particular. Now, taking a look at this on the silver chart, it's a different kind of a market. You see that silver doesn't really have the kind of bullishness that we see in the gold market, and we had a rollover, so this is why we see the futures opening a little bit higher. It's only if it is able to break above this triangle formation that we could actually aim for 36.68. There is a good chance that we might eventually see 36.68, but it might come a little bit later on, so we might see the lower end of this trading range being tested one more time before the market is finally able to break above this, and we might complete this ABCD. This is more likely to be the scenario if the US dollar begins to weaken, so I think that should support the commodities and the metal markets and the silver market in particular. But you can see it's not as bullish as what we have seen in gold. This high remains below this high, and the longer this remains in this kind of congestion, I think we could begin to see a case for a head and shoulder patterns formation as well. So silver, not as bullish. Maybe it's able to play a catch up to the gold, but if gold also begins to weaken, then I think we can see further weakness coming to this metal. It might be shorter term, but this is what the price action is suggesting thus far. Now let's take a look at the Bitcoin. So Bitcoin is doing something really interesting. So here we go. You can see the Bitcoin has been under a lot of pressures. In fact, the entire crypto spectrum has been under pressure. It is finding some support from the 1.272 expansion, but the chances are that with this kind of wide-ranging bars, it is likely to move lower, and this is like an indication of, in my opinion, a change in trend. I think we are going to see further weakness probably coming into this market, and where the support is around 73,000. This is something which we had discussed before as well when I did the last video specific to the Bitcoin and crypto markets, that if we begin to break below this key level that we had been watching, especially this low right here, we might be actually looking at a lower prices, and this is what we're beginning to see now. We might see some sort of a bounce from this, and the bounce could actually go or take us to about maybe 38.2% retracements. We might see a bounce to about 92,500, and if the market is just not able to rally from here or find resistance between 92,500 and 95,685, then we could see another leg lower, which could see us come back into this region of about 73,000, 72,000, or anywhere between 70 to 75, where there's a lot of structural support right here. So that pullback could happen in the Bitcoin. And if we were to take a look at Solana, So there's a lot of volatility in Solana. You can see that this was a structure we were watching. Our structure failed when it closed below this on the 24th of February. Now it's approaching a 78.6% retracement, which is of these lows right here. But this is not the big. I think I'll have to use another low. This was just the low from this one, and then if I might have to take another low from here, and we might get a confluence somewhere. But the short answer is that just like Bitcoin, we are close to some sort of a support level where we could see some bounce, but you can see that this market has been just moving lower, lower, lower after hitting these 1.272 expansions. This entire structure that I have been watching, once we broke below this ABCD, it is just no longer in play, so I will delete that. And now let's take a look at let's take a look at the British pound, because as the dollar was weakening, the British pound, we were watching a key level. So it's closing above the 78.6% retracement. I think the British pound is getting stronger. So I think we could see this is the key level I was watching, around 126 and 127 by the looks of it. I think probably we're not going to see lower price. It's beginning to look stronger after completing this pattern right here, and especially on the weekly chart. Here we go. This was the big number we had been watching. It went a little bit lower, but there was no follow through, and we are seeing the price right getting into this 200 week moving average as well. So we have a number of these moving averages on the weekly chart coming together. So this is where we could see sideways to downside price action, but it does look like the weakness in the dollar is actually, this is how these currencies are benefiting, but it's not happening in the Bitcoin. So that's an interesting one to watch. And here a nice rally of the 102 levels from this support. Now it's tackling the 20-week moving average. We could see more of a sideways price action in the fiat currencies. All right, so now I'm gonna move to the equity indices. So I will be a little bit quick with the equity indices, so that the video doesn't get too long. So this is the cash index for the S&P 500. Now the S&P 500 has been moving lower, lower, and lower for about 4 or 5 days. 1, 2, 3, 4, and on the fifth day it actually closed 0.01%, almost negligible, and because the gap, the chart doesn't show it. Now the key thing is that we were watching for roughly around 6,000 level as a key support, but that broke down. Now the entire structure that we had been watching for higher prices, this ABCD in blue, the market actually on intraday basis went lower but did not close below it. That is quite important, and the chances are we could actually begin to see the market rotate higher, at least test the upper part of this trading range, and maybe even complete the ABC, or at least get to the 1.272 and possibly 1.618 expansion levels. On the flip side, you can see the market has just not gone anywhere for pretty long time. So it is coming under pressure, but with the Nvidia good earnings out, I think there is going to be support in terms of the broader indices as well, and we could see a move higher. That possibility is there. So since we did not take this level out on the closing basis, I think I'm more onto this side of it to give the pattern a benefit of the doubt. And maybe the market actually begin to find a pretty good support from this level. So we'll see how the price action will fold for us in the next 2 trading days. Now let's take a look at this weekly chart. You can see just sideways market for quite some time now. Right at the ABCD, we have these double ABCDs right here. So this is why the market is just not going anywhere. If we begin to take some key levels out, so on the weekly chart 5,772, then we are actually in a bigger corrective move. Right now, really hanging in by the thread with those key levels. Let's see, which was on the daily chart. Let's see how the market will close for the week. And on the futures, we have similar situation. The market is just gone nowhere for a couple of months now. And on the weekly chart, excuse me, on the daily chart, you can see the futures actually closed a little bit higher. I think it's because of the Nvidia earnings, which have been good. So the price action benefited through that. So I think we begin to see with the scare of Nvidia earnings out because of the positive growth for them. I think the broader indices are likely to find good support and good rally, and this should also benefit the Magnificent Seven stocks such as Meta in particular, Apple, Amazon, etc. So I think that trade might have a little bit further to go because of the earnings of Nvidia. So we'll see that in tomorrow's price action how that will unfold for us. Now let's take a quick look at the NQ. You can see the same thing, positive close for the previous day because of Nvidia earnings. It's just an inside bar. Looks like from the bottom of the range it is finding support coming in from the 78.6% retracement. And now really interesting one for us is actually the Dow Jones, because the Dow Jones has been pretty weak. Double top formation right here. And what we can see is, because it's a price weighted index, Nvidia is not a Dow stock. I don't think it is. So what we are looking at is just market going on the daily chart range bound, just above the 61.8% retracement. So as we are moving into the month of March, I think we have some key timing also coming in. Let's see what the price action will give us, but with this kind of price action, especially in the Dow Jones, it does begin to look more on the bearish side now, and if we begin to take out some key levels, we could see further pullback happen, especially in Dow stocks. Now let's also take a look at Russell 2000. Let's see how they did. So Russell 2000 testing the bottom of the range. They have had a pretty big correction since last November. They have been down about 13% now, and you can see that this is this formation is not looking that good. So Russell does look it's not beginning to look not that bullish. If we begin to close below this, I think we could have been ABCD lower, but with the yields actually retreating, that should in theory benefit. So really in a situation which is wait and watch, in my opinion. Now NYA, which is the New York Stock Exchange Composite Index, it has had a better price action in comparison to Dow Jones. And this one actually topped back in November of 2024. We had a pretty big pullback, and then we have seen a retracement right towards the top. Looks to be more of a range bound affair. So this, let's see how the price action will unfold. But it topped back in November of 2024. That is an important development to take a note of. Let's see what the price action will do. Thus far, it seems to be finding support from a 38.2% retracement, which came in right here. So it's just a pretty range bound price action. So this is what we are watching in the key US stock indices and markets. The markets have been pretty volatile over the course of since last Thursday, Friday in particular. So it's really cautionary to be careful in the markets. The volatility is likely to remain here for quite some time, and we'll be watching our key patterns and key levels really carefully, and I'll keep on making these videos to update you guys. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.